Morning all, how we doing? It's Wednesday. Finally got some news happening this week. How's everybody doing? So we just had the CPI figures for the UK. Positive 9.4. I don't understand this really. Actual greater than forecast good for currency. That doesn't actually work that way. Basically, the cost of stuff is going up. So things have gone up in price, which means it costs us more money. They say it's good for the currency, but it's only good for the currency depending on what's happening with inflation and interest rates. So it's a bit of a sweeping statement. It's good for the currency. Certainly not good for us at the moment, is it? So CPI's gone up, therefore the pound came down. Completely opposite to what Forex Factory says, which is why you just have to ignore the news and what Forex Factory says. Yeah, so we just had CPI there. We got CPI on the CAD later as well. So 1:30 before New York opens, we've got CPI for the Canadian dollar. So hopefully we'll get some kind of action off of that as well. We had low speaking this morning, had a bit of impact on the Aussie. Not a massive amount. We got a little bit of a rush up on the Aussie, but nothing dramatic. So no real impact there. Tomorrow's obviously the big day. Morning, Jarmon, Stevie, Trevor. Rocking and rolling, good. So tomorrow's a big day. We've got this is the one I'm interested in. Well, I'm interested in both of these equally tomorrow. But want to see what happens with the yen tomorrow. What Kuroda comes out and says they're going to do with monetary policy moving forward. That's going to be quite a big impact, I think. It's either going to be a big impact or he's going to come out and say nothing different, and the market's obviously going to do nothing. But if he says anything different to what the current monetary policy and bond purchasing policy is, then we should get some decent movement off of that. And obviously euro financing rate tomorrow, I'm sort of 70-80% sure this is going to be a 0.5, not a 0.25, and we're going to get a massive pump on the euro. So really keen to see what happens with that tomorrow. And then 1:45, just before the New York Open, we've got the ECB press conference tomorrow as well. So the fallout of what happens with the financing rates will be discussed, and there'll be lots of questions as to what they're planning moving forward. So yeah, should be a good day tomorrow as well. We'd like to see some positive news on the CAD today and yen tomorrow, Stevie. Yeah, me too. Well, actually, I'm mixed on the CAD, so I don't really care which way it goes. What I'm interested in is this stupid US dollar doing something. This US dollar CAD is struggling at the moment. US dollar's struggling basically across the board. So we just got quite a deep pullback happening on the US dollar at the moment. We've got these two areas of support coming up, which I need to hold really. But yeah, it's really not out of breath. And I've got Aussie CAD short as well, so I'm hedged on the CAD. So yeah, I don't care which way it goes today. I'm going to make money out of one of them, and then I'll have to deal with the other one. Morning, Franco. So we'll see. But yeah, so pound US dollar this morning, we had a bit of a dip off the news. It's just pulling back off of the Asian low at the moment, but I think we should hopefully get some downside on that today. I've got a target towards the lows down here, which is the previous day's low as well, for an initial position to take off. So we'll see what happens. So just quick recap yesterday. Banked 0.5% yesterday, not massive. So Aussie CAD was my, I think Aussie CAD was the only thing I banked yesterday. Yeah, oil. So Aussie CAD took 2 positions. We were 125 ADR on the Aussie CAD yesterday, so I got in at 100 ADR, I got in at 125 ADR, and I took both of those off. And we're still roughly, I had one in profit still, which I left running, which is break even on that one now. Well within an ADR, so no issues on that one, not worried about that. The oil trade was just another exit on a buy, so I'm just constantly buying oil up every time we break. So we had an M5 there, which didn't take off yesterday. So annoying. I had 0.25% on this yesterday up here, and I thought I'll close that one out before I go to bed. And I got up here at about 10:20, no 9:20 rather, because the market shuts at 9:15. So I couldn't close it because the market didn't open until 3 o'clock in the morning for oil. So yeah, that's come down again this morning. So yeah, hopefully we'll get another push on oil today. So what I've gone at the moment, Aussie CAD, as I said, well within half an ADR away from getting out of that. Pound US dollar, same story. Just need half an ADR drop ish, and I'll start scaling out of that. New Zealand dollar Swiss is well within an ADR from break even. US dollar CAD is the only one that's not really getting away with from me, but it's getting basically when I start getting roughly an ADR away at break even, that's when I start to think, right, I need to start doing something about this one. So I'll start doing some DD control on this one. If we don't get any strength off of the US dollar today, markets have been pushing really hard. So all the indices are having a really good run at the moment. Hence the US dollar's struggling. Money's going into stocks at the minute. So we're struggling with US dollar. But we are back up at these highs. We are now back up in the 24.72 zone. This is where we should be looking for next leg down. It's earnings week this week. So there's a lot of big stocks coming out with earnings figures. So today and tomorrow, there's a lot of aftermarket today. So tomorrow's going to be a busy one as well. So we're getting a lot of people buying stocks up basically because there's good earnings being reported across the board. And then all of a sudden they'll turn around, the market will turn around and go, yeah, we're still in a recession, or we're just about to collapse, or something's going to go wrong, and it will all start coming down again. So it's a temporary reprieve on earnings at the minute. So hopefully it doesn't last too long. But yeah, good day yesterday across the board. We had big buy-ups. I lost again yesterday on the futures. Just couldn't get my head around a long yesterday, and it kept longing. So I got chopped about a bit. I've got a few longs in, which worked really well. And I was buying the breakouts nicely. But I stopped buying the breakouts because I thought we were at the end. And we were hitting these levels up here. That's the DAX. Let me just show you on the S&P. So yeah, this area onwards, I started trying to short it. I started trying to short it here. Didn't work, so I went back long again, got my money back, tried to short it there, didn't work. And it just got me at the end of the day. So I ended up with a loss, a small, medium, I would call it, a loss yesterday. So yeah, 2 days on the trot, 2 losing days on the trot on futures. But so today we're up at the highs. So you can hear the market is selling off at the open. So we'll see what happens. DAX, we're up at decent potential support resistance levels here. So we got this one here. And then we got this level, whoops, this level here. So we got good potential support resistance areas coming up here, where we may start to run into a little bit of selling pressure. So we'll see what happens at the moment on this one, but I can't see this being the end, to be honest. So I think we're just getting a big reaction off of these lows, but we'll see. We will see. So yeah, indices, good day yesterday. nice little pump, but all coming up to areas of interest where we should see some selling start to come in. So ADRs, we've already had New Zealand dollar Swiss this morning hit its ADR. I've taken another position on this one this morning. So you can see we had an M5 reversal alert, so got into another position up at ADR. We've got a nice pullback off of that, so we'll see what happens. This propulsion gap's holding some buyers. This is the one that I'm really interested in though, because this is where the accumulation was. So I think we're still going to come down and retest this level. Market's selling off nicely this morning. So yeah, that's already played out in Asia. Kind of missed that one already. Nothing else hit. We've got no weeklies yet. Quite a flat week again. We had this last week. We didn't start getting weekly range hits until sort of Thursday, Friday. So we'll see. Morning, Jesse. Building a short on the DAX with warrants. I think we'll see the low in around Q3. Yeah. Well, difficult to tell with all these indices at the moment what's going on. We've still got decent amount of room for, we got, you know, a kind of 7 to 10 ADR move to the downside left on the S&P before we get down to that 34, which was pre-COVID, which is where a lot of the market is calling for. So I'm just quickly banning some idiot from the group. Spamming in a different language. There's a good one. Not seen that one before. Spamming a different language so they can't see that you're actually promoting a broker. So I think we got plenty of downside. I would just keep buying it basically. As long as it's red, buy it, sell it. Just keep buying it. Sell it. Literally don't think this is going to stop at the moment until we get on top of inflation. And there's loads of talking heads coming out at the moment about not going into recession still and getting inflation under control in 2023. We may well get inflation under control in 2023, but only by putting interest rates up to the point where nobody can buy a house anymore. You know, it's just then the housing market is going to pop. Everybody's going to lose their houses. I seriously don't see us getting out of this financial crisis in any shape or form over the next couple of years without getting a recession. So as long as that recession is on the cards, this market is going to be in a downtrend. We're going to be in a bear market. So I'm going to keep selling. But intraday, obviously, do what you like because it moves up and down. I kept out. I wonder if it was a big squeeze before a sell-off. I lost still. Oh, that's no good. Kept waiting for the short, which kept me out of longs. By the time we had a rally, I'd called it a night. Yeah. It was a tough day yesterday on the S&P, on the indices. These trend days, when you get them, are beautiful. So what I find with all scalping on anything, but obviously indices is mainly all I ever scalp on. The problem is if you have a directional bias for the day, like yesterday I had a short directional bias. By the time you've got killed a couple of times and gone, right, we're in a trend day, and you jump on the trend and make some of that money back, you've kind of lost half of your trading day. You've missed it. There's a really good video that one of the guys at Top Step's done about futures trading and the bell curve you get, which is what they call the value area, which is what you'll see in the futures: the value area high, value area low. You get the early adopters here. These are the early adopters, And then you get the innovators. So the innovators are the ones that start the move. The early adopters are the ones that spot the move early. And then there's everybody else that gets in and makes a little bit of money. And then you've got the laggers at the end. And whether you become... You're never going to be an innovator. This is the banks. These are the guys that start the move. If you've got the right bias for the day when you start, and you've got a 50-50 shot, obviously, of being right on your bias, you become an early adopter. And I find if I become an early adopter on the day, I will just milk it all day long. And I will have like a 70-80% strike rate for that day. If I've got the bias wrong, I won't be an early adopter, and I will be in here somewhere where the chances of making money are literally that rather than that. Yeah, double the chance. And because you're not the early adopter, what happens is you also miss out on you also take a loss while you're discovering that you are wrong. So it's a really interesting analysis, and it all comes down to your bias on the day. And the thing was about how to identify the bias of the day, whether we closed above or below the previous area's value and all this sort of stuff. So but yeah, interesting. But yeah, I got chopped about yesterday. I was not an early adopter yesterday. 2 days ago I was an early adopter, and I made $3.5 grand in the Globex session. You know, it really does depend on your bias and your ability to switch bias. If the market is telling you it's going long, i.e. we are just not getting anything, you're getting hit after hit after hit trying to sell the highs, switch. There's way more chance of it continuing to do what it's doing than there is for it to stop doing what it's doing. So, but anyway, bulls are stepping in at the moment. We're just back up where we started. So big push down the opening range, and we've cracked above. So looking long again, but look what they've done this morning. Straight down, filled the gap, and we're off. So longs again today by the looks of things. Franco, Singapore dollar Swiss, please. I don't even think I've got it. Sorry, don't trade exotics. I don't even think I've got a Singapore dollar. No. Can't do that one. You're mad trading Singapore dollar. Well, I say you're not mad. If you can make money out of it, brilliant. Keep doing it. But exotics, everybody I know has been killed many times on exotics. They're a bit like gold. Very low liquidity, very high slippage, big spreads, and you get in short and it will take you out with a spread. That's my experience with it. If you can make money with it, go for it. But I haven't got it. Sorry, I can't look at that one. So anyway, ADRs, hourlies. We've got a couple of hourlies. Woohoo! We've actually had some movement in Asia, which has given us an opportunity on the hourlies. New Zealand dollar yen. So all these yens basically, we've had a good push on all of these yens. We had a weak yen, which has given the market a chance to get a little movement to the upside across the board. So New Zealand dollar yen is extended because we had a good strong New Zealand dollar as well. So it's just coming down at the moment. So we're extended there. If you look at the 4 hourly, we're also massively extended on the 4 hourly. If you look at the levels, we are also, what the hell? We are also up at a lovely area of support and resistance. So this whole zone here, from this high down to this high here, is an area of interest, and it's up at ADR. So this looks like a lovely potential shorting opportunity. We're going to have a lot of limit orders firing off in this zone to drive the market back down again. But it's at the moment, I mean, the trouble with taking this trade today is you want it done. You need to be in, you need to be out, you need to be, thank you very much, because tomorrow we've got the Bank of Japan monetary outlook. So there's every possibility tomorrow they could pump the yen, in which case obviously I'm sorry, they could either pump the yen, in which case obviously we're coming down, or they could come out neutral stance and business as usual, in which case this thing's going to fly back up again. So it's all going to depend on what Kuroda says tomorrow. We are overdue on the yen. We know we're overdue on the yen for some strength. It's whether or not they're in the right position at the moment to do it. So Franco, carry on trading exotics if you want to. It's only a warning from my experience. A lot of people trade, a lot of people trade synthetics as well. My view on synthetics, made by brokers for brokers. But the exotics are far. The ZAR. Look at the ZAR. I've got the US dollar ZAR on here. This is an exotic. Look at the ADR on it. Yeah, 2,779. Look at the ADR on Forex, normal Forex pairs. Yeah. The reason this has got a 2,779 ADR is because there's no liquidity in the market. Somebody goes long with 5 lots and the thing goes whoop. It doesn't take much to move the market at all. So you've got to just be careful with it. And if you look on the 5-minute chart at the spread on this thing, this is actually not too bad. We're in London, but look at the spread in Asia, and look at the way this thing moves. Look, if you see a chart like this, where you've got this sort of thing, you've got these like tiny little. It's like that, there, yeah, and then you've got these tiny little dojis where literally it hasn't moved at all. You've got no movement whatsoever, and then you've got these tiny little moves. It's so difficult to trade them. So difficult to trade something like that. So if ever you see this type of chart, it means there is no liquidity in the market. And when there is liquidity, i.e. someone puts a small order in the market, it jumps from there to there. Yeah. So this thing moved. This would have been one order executed. This thing moved nearly 100 pips. They're just they're crazy things, and you just find that moved 20,000 pips. 20,000 is that? Sorry, I was reading that right. Yeah. Just be careful with them. I started trading them. Somebody told me to trade them. I did a course. I can't remember which course it was, but I did a course, as you do. And they only traded synthetics in this course. And the reason for them trading synthetics was because they moved fast, so you could make more money. You could also lose more money much faster. So, especially if you don't know what you're doing. So, anything with liquidity, i.e. the majors, minors, and crosses. For me, was just short New Zealand dollar Swiss in M5, looking for a nice reversal. Hit ADR, yeah, well, I'm in that as well. New Zealand dollar Swiss, just got in that one short. Where was I? Sorry, went off on a tangent there. I just like to say about these things, because I've been around for such a long time. I've done everything. So just, if you're trying new things, it's always good to have somebody's opinion, but you don't have to take it. So yens obviously be very careful with. Like it, but I'm not getting into any yen one day ahead of potentially the biggest news event of the year on the yen. It may do absolutely nothing. It may be it's a fundamental shift news event. Yeah, so it will either be the fundamental shift or it will be business as usual. We don't know which, but if it is the fundamental shift, I do not want to be on the wrong side of it because you're going to be in trouble. US dollar CAD. Nicely extended on the hourly. I'm already in this underwater at the moment. This is US dollar basically. Even we've had a Canadian dollar weakness as well this week, and even the US dollar's dropped against Canadian dollar weakness. So it's not good. Morning, Fabio. You don't have to say sorry for being late. It's not school. We can class it as school. Maybe I should start introducing a 3-strike rule and you get detention. US dollar CAD. This is the area I'm interested in. and the 72. So if we breach that, then I'm going to start thinking hard about aggressive drawdown control. But all the time we've got this backing up, I think that we're going to get this bounce. Canadian CPI this afternoon is either going to really help or really hinder. So we'll see what happens with that as well. So those are your extensions. I like the US dollar CAD long. Obviously, I like the US dollar long. US dollar CAD is a very much a strong against a strong currency at the moment. So the US dollar at the moment is kind of winning out. Market structure is bullish. Canadian dollar will grind on oil, and oil is slowly grinding up. So I still think the US dollar, when the US dollar gets good news, it moves a lot faster than anything else. So we're just waiting for that catalyst to give us a kick, really. So do I have to raise my hand to ask a question? No. You could just ask. You should always be jumping up and down going, pick me, pick me. I can't ask questions in here anyway, because if I ask a question in here, I have to sit here for 30 seconds waiting for the lag to catch up. And it's just awkward silence, isn't it, for 30 seconds if I ask a question. So there's your hourlies. There's only a couple there. There's a few things getting close as well. Aussie US. There's a lot of these USs getting close on the hourlies. That one's just coming out of hourly extension actually, but yeah, a lot of things extended with US dollar because of this US dollar weakness we've had. So expecting some kind of strength to come through on the US dollar. But to do that, we're going to need the stock market to calm the hell down and get some bearish movement in the stock market, which obviously at the moment is not happening. Especially yesterday. This is earnings related though. So we had this last time, earnings. We had a pop on earnings. And then we had a collapse twice as fast. So just a waiting game, patience. So 4 hours, we've got quite a few to look at. I'm not going to go through all the pairs today because I've done it actually Monday and I went through all the pairs again yesterday as well. Normally Wednesdays when I go through all the pairs, but we've had a very odd start to the week. So I went through all the pairs again yesterday looking for other opportunities. I'm just going to cover all the 4 hours today, but if there's anything else you want me to look at, let me know. And I'll go through the plans of what I've got with the current positions I've got on as well. Aussie dollar yen. So again, 4 hour is very nicely extended on the RSI. Obviously look at this squeeze. This was the squeeze, the initial multi-week squeeze that we had on the yen. Wasn't the initial one actually, there was one further back, but this was the fastest one. We got extended, we got embedded for a couple of weeks on it. So that's the potential danger we have with the yen at the moment. So if Kuroda comes out tomorrow and says we're not doing anything, we're worried about this, we're happy with this at the minute, blah blah blah, and there's just no real direction or no real strength in his policy, we'll probably see a continuation on all yen pairs with weakness on the yen. If however he comes out and says, right, we've had enough of this, the yen is too devalued, we need to pump it, they will need to stop bond purchase, they'll need to do they need to talk interest rates, they'll need to basically pump the market basically to say this is what we're going to do to dig ourselves out. Then we're going to get a big strong move on the yen, which will probably be a week or two correction. So I'm waiting to see what is said, and then I'll have a bias. And then if the bias is as usual, I'll wait for pullbacks and I'll keep longing the yen as I have been for quite some time. So that's extended to the upside. There's a few other yens extended to the upside as well. We'll quickly whiz through those ones because they're the same story. Swiss yen extended to the upside. Swissies are long, yen at the moment is a short. Extended to the upside. I'd rather wait for a pullback long on that. But for a quick scalp short, you can take it, but you need to be out of stuff today. Tomorrow morning, you don't want to be in the yen just in case it goes the wrong way. Euro yen. Nice big move on the euro yen. We've had a very strong euro. on some of these moving into the rate announcement tomorrow. So that's really extended. Again, would be a normal mean reversion short on the euro, but I'm not doing anything with these two pairs because both of them tomorrow have got their big potential fundamental shift news events coming up. So not interested in that. And New Zealand dollar yen, again, this is one we just looked at because it was hourly extended. Of all of them, this is the nicest, but only from a technical perspective. If the fundamentals shift, technicals go out the window. So again, be careful. If it gets up to ADR today, or let's say this one actually manages to get a sort of 125 or 100 or 125 ADR hit, and we are in that area of interest, it's got to get there this morning, and it's got to be out by the end of New York. Yeah, so if we can get a continuation push up here this morning up to ADR, I would be interested in taking a short, but it would have a stop on it, and I would need to be out by the end of the day. So any of those yens that hit, you can potentially get into them, but I wouldn't be in them holding for too long. We've had a load of sells just come in, big orders just executed on the S&P. So there's a lot of sell side interest on the indices this morning, way more than buyers. So whipsaw again, look, horrible. This is the same price action we had previous. Whipsaw. Oh, that's something I was going to say. Diamond, we were talking about opening ranges and using potentially the 15-minute opening range instead of the 5-minute opening range. I learned something interesting yesterday. Again, like I said to somebody in the Telegram group who was saying I'm studying today because the market's quiet. I do that the same as well. I'm constantly watching videos, reading stuff, never stop learning in this industry. I learned something new today about futures. The typical opening range by most professional institutions is 1 minute. So what they call the opening range is that when the bell rings in New York, you have, and it's the same in FX, you have a queue of orders. Yeah, so the institutions, the banks and everything, they will have a book of orders that they need to execute for their clients. And basically what happens is the very first orders executed at the opening bell are the book orders which need to be executed, which are the hedges, the speculative positions by large investors, that sort of stuff. Nowadays, what used to happen in the pits was that would go on for 5, 10, 15 minutes, as long as it needed to until those orders were executed. Because 90% of the trading is now electronic, the opening range with most professional institutions is classed as the first minute. This lot's all done in a minute. The book's executed within 1 minute. So the 5-minute opening range that you see here, this candle, whatever this candle ends up as, and this is a really good example actually this morning, look, massive bullish candle, huge tail, look what happened straight afterwards. But what we actually missed was the 1 minute candle. This was the institutional, sorry, not that. This was the institutional opening range. Lower that candle. Yeah. That's what they class as the opening range. Yeah. And as you can see, look, once the opening range was in, it never closed below the opening range and we took off to the highs. So that candle there, from an institutional perspective, was bullish. And you see on the 5-minute chart, we were there, weren't we? That's what we saw on the 5-minute chart, which is that, and that. We missed the entry. So found that out yesterday. Interesting fact. Didn't know it. So the opening ranges typically most traders, including myself, have been looking at in the past is actually 1 minute. So what you should be doing on your Price Action Toolkit, which is not an indicator, is using this 1 minute opening range. So it should be 10:01. That really should be your opening range. And for me, 16:31. So yeah,
Anyway, I'm digressing onto other things, as usual. Gunon, God, I can't say your name. Gunonlin. Yesterday I sold Euro US dollar. Can you help to see if there's a good choice or not? I'll have a look at that in a sec. Well, 1 minute, that means the next 14 minutes volatility is most of the reaction to that. And that is where the money's made, those 14 minutes. 14 to 30 minutes. And I also learned something else new yesterday about the TPO chart, which makes up the footprint chart. Always works in 30-minute increments. So buying the 30-minute or selling the 30-minute highs or lows is a really good strategy in futures, because the TPO is made up of 30-minute sessions, and that's what the pits used to work on. They had you have the A session, the B session, the C session, and if you look at a TPO chart, you'll see the letters A, B, C, D, E, all the way up to usually N, O, P, depending on how deep the day goes. But yeah, the A session is where literally all of the initial large speculative orders and the book orders are placed. The B session is where the real speculative profit taking starts. The C session, an hour and a half in, is where the market calms down because they've done most of their volatility, which is why everything happens in the first minute and then everybody goes, right, now let's trade. So literally you have an hour and a half from the open, and that's it. If you're still trading an hour and a half in, you've missed the boat. You are in that bell curve that I drew. Yeah. I would say the innovators are the first 15 minutes. After that, when you get to 1.5 hours, you're in this bit where it's really hard to make money. The early adopters are between 15 minutes to 1.5 hours. That is where the money's made in the markets. You literally have 2 hours to do it. But anyway, yeah, I've just been beating up on more and more on futures because it's changed a lot since I did it, since I was trading them 5 or 6 years ago. So much more electronic trading now, and the high frequency algos have really taken over the world. So yeah, covered all those yens. We're going to cover Euro US dollar because it's an H4 extension. So Aussie US. So all the yens basically in and out today. Otherwise, get yourself flat if you can. Aussie US. So this one's nicely extended on the 4 hour. I'm short, so I can't take this one because my exposure doesn't allow me to take this because I've already got too much US exposure on. Got two. But yes, this is a nice looking short as well. The thing I like about the Aussie US at the moment is the amount of resistance that we've... Ooh, why did that not draw? The amount of resistance we've potentially got coming up. So we're at a level here. We've also got that area there. We've got that area there. We've got that area up there, depending on where you want to draw it. That's the best place. Yeah, it's very strong up at the 72. But we've got loads of potential bounce points. So we're nicely extended. The bias is short at the moment. Aussie's kind of neutral, US long. So bias is right. Trend is right. We are just pulling back a lot deeper than we were previously. Nicely extended. Need a profit take move on it. So that's a really nice looking entry on the Aussie US. Euro US is extended on the 4 hour, mainly on this US weakness, and obviously we've got potential tomorrow for this to become the bias on the euro. So we've got this area coming up which is 125 ADR. If we're extended up here and we push up to 125 ADR level, that is highly likely that we're going to get some kind of reaction around this level. So if it isn't a bounce, it should be at least a pullback. We've got a lovely big H4 propulsion candle to come back in and retest as well if we're going to continue with an up move. So that kind of movement, if we're going to go bullish euro, and euro is going to overtake US dollar from a strength perspective. Oh, my DPD driver is coming today.
Sorry, just getting these notifications popping up everywhere. So yeah, so that's kind of the way I see that one playing out. Either that or pulling back and then pushing. Either way, you're extended now, so you can get into this one as a short. Looks good. There was an entry on this yesterday, I'd imagine on M15 somewhere. Would have been there. There, that candle there would have been your entry, M15 yesterday. It's just been invalidated by a new high this morning by probably 2 or 3 pips. So yeah, nice short opportunity. If you're not in it, there is a short opportunity. But again, I can't get in any more US dollar, and I wouldn't want to anyway. I'm not getting in any euro ahead of the news tomorrow. The danger with this one, being in this one, is if we do this today and you have gone nowhere and the euro powers up tomorrow on increased interest rates, you're in a squeeze fundamentally in the wrong direction of the euro. So be careful with it. But equally, if Lagarde comes out and says we're keeping it at 0.25, I get the feeling the market is just going to go, what? And it will tank hard. And the other thing you've got to bear in mind is, obviously, the market knows the euro's in a mess at the minute. This 0.25 tomorrow increase that's expected, when we know roughly what they are going to be doing, it's factored into the market. So the market moves and it positions itself, assuming that the news is going to be as expected. And that's why when we get as expected news, you tend to get a continuation in the current direction. So if the euro is going down against the US dollar, the market is expecting 0.25%. The market will be short on the assumption that 0.25% is going to be released. When we get 0.5, the market's like, wrong. If it is 0.25, the market will go, told you so, and it will add to its positions, which drives the position further. So that's basically what's happening in the institutions when the analysts are looking at it and doing scorecarding on all of these fundamental events. So if you're in this short, you want to be praying for a very small interest rate rise or an as expected interest rate rise, and you should get a continuation short on it, but we don't know. So a little bit risky getting into a euro ahead of the news. 1:30 tomorrow afternoon, 1:15 tomorrow afternoon, you're going to know if you're right or wrong. If you're wrong, there's not a lot you can do about it. So if I was you and I was in this, I would wait today, assuming you're position trading this, obviously. I would wait today, see where you are, and I would get a protective stop in the market. So that if we get that, you're out. And you take a loss on it. But you won't be taking a week's worth of drawdown on it. But, this is the trouble with fundamentals. You don't know how the market's going to react, how much of the market is factored in before that reaction comes out. New Zealand dollar yen. So New Zealand dollar US dollar as well. Again, really like this as a short. I'm exposed on the New Zealand US already. In a short. So I really like this one as a short. Extended on the 4 hour. So yeah, it's in a prime spot, absolutely prime spot for shorts. It's pushed up nicely, it's extended. We've got nice area of support and resistance coming up. We're going to get into a load of chop, a load of balance, and yeah, looks good. So no reason why this shouldn't continue unless the US dollar is doing something unknown. Indices are pushing down very hard. Remember I said those big sell orders that just came in? They're adding to them. These are institutional orders, big orders. A lot of institutions going short this morning. So a nice big push down. So New Zealand dollar, US dollar, yeah, shorts, M15 reversal alert, just had it and retested this morning. So right now is a really good spot to get in on that one. And the other one was the US dollar CAD, which, as we know, I'm already in. Long. So I'm waiting for the US to wake up and pump their currency. Actually, they're not doing it at the moment. So we're just coming down to support. So there is potential for us to drop down and retest these areas. There's going to be liquidity sitting under these areas, obviously, especially with that. There's going to be a lot of liquidity sitting under there. So I wouldn't be surprised if we get a push down here today. What I don't want is us to hold down here. I want us to test this area and reject this area, and then we've got good legs to start the next move. If we push down and we close like below here, then I'm going to have to start thinking, right, okay, there's something not right with this. Either the CAD is way stronger than I was expecting, or the US dollar is way weaker than I was expecting. Yeah, just waiting, really. Even if I'm still within an ADR away, so, look at the 4-hour candles. Yeah, look at the size of that candle. I only need one of those, and I'm virtually out of this position anyway. It's just we've had this multi-day drop. So we've had a 3-day drop after the push out the highs. So just waiting for a pullback, a decent pullback. You see I got out of some of it here. Took 2 positions long there, did a bit of drawdown control on that one. Been scaling out of it longs. Even took a shortlet because we hit 225 ADR on that day. So yeah, just waiting for the profit take to start, but it's not kicking in just yet. I'm using a grid for Euro US dollar, already in profit when it touched yesterday's 125, closed for some profit. Yeah, just to try and get flat by tomorrow, I would. So when there was 125, was that yesterday? 1500, yeah. So that was 125 ADR day yesterday. You got 50 pips downside on it from the highs. Yeah, your reverse alert was in there somewhere, wasn't it? Actually, your reverse alert wasn't there, so you only got 17 pips downside on that. We've just come up and taken out new highs, so I would get in this again today. The way the indices are going this morning and the volume of sellers coming into the indices this morning, I get the feeling we might actually get a strong US dollar today. So if that's going to happen, there's going to be no money coming into the euro today ahead of tomorrow. So the US dollar should have enough power to get this pushed right down today, come back down and test some of these big moves up. So looks good for a short today. I'm exposed at the moment on the US, so I'm not going to take any more myself. But looking good. Still selling. Zoom. All that rejection at the highs, look. Boom. Right. Have I got anything in profit yet? No. Still sitting here waiting on all of this. It's all like sort of moving, but not moving. Very undirectional at the moment. New Zealand dollar Swiss is doing all right this morning. Nice weak New Zealand dollar. That's good. Just need the Swissy to power up a little bit with the euro. That's not going to happen. But unlikely. So yeah, big sell-off going on at the moment. Nice reverse alert retest and drop on that. So loads of downside on this one this morning. Previous day's high would be first target, but after a day like that, you usually get a 50% retracement on the candle. So there's yesterday's previous day's high. I think we can get down a lot deeper on that today. I mean, you look at that 3-bar reversal there. Why not? Let's have a bearish engulfing today. We'll see. But I'm buy a short at the minute on these. We're up. This is exactly where I would expect the institutions to start coming in and selling this thing. If they're going to keep it in a range,
This is where they're going to do it. You know, we've got range lows down here. That's the target. Like it, short. Might trade Globex today on the futures. We'll see. Anybody got anything else they want to look at? Any other pairs? I haven't covered all of them this morning because there's not much point in covering all of them. New Zealand dollar yen, nice extended. We just had something else light up. What's the time? 8:41. No. So potentially get a little bit of a pullback on this now. So a lot of orders in the way here on this, but today I think selling the lows is the way forward, and selling these selling the pops back up into those areas, and just keep going until basically the market says no. There's massive negative delta this morning. We've just popped back inside yesterday's value area high, which is here. It's the value area high and the value area low from yesterday in the point of control. So point of control potentially is an area of support in futures. That's at 39.35. So might have a crack on these this morning. Franco, I didn't take a pill. What's that? This is the futures platform that I trade on called Jigsaw. Yeah. Have you not been in here since I've been trading futures? Maybe not. Frank, I didn't see your comment. I just gave a FX guru his next hustle, the minute millionaire strategy. The minute millionaire strategy. Here we go. Futures breakout, minute millionaire. Short one. So I've just changed my charting as well a little bit. Just to slow down a little bit. It's so annoying when that does that. Changes the colours. The colours go wrong. There we go. Let's fixed it. So I've switched over to 5-minute charts just because the delta gives you better clues on 5-minute than 1 minute, and the divergence is clearer. We were looking yesterday, don't know if Jesse's in here, but we were looking at 1 minute yesterday. Delta divergence on the ES, and it didn't play out obviously because it kept pumping and pumping and pumping. You get a lot more 1 minute delta divergence signals on the 1 minute chart than you do on the 5, and it's just a lot clearer. And I've also switched back to candlesticks, just because highs and lows are just easier to spot than on the bars, which is what I was using previously. The highs and the lows I just find easier with candlestick. I think it's just because my eyes over the years have been programmed to candlesticks. Why is that gone to 30-minute? So big order down here that's probably going to act as a magnet. So if you haven't been in here before and seen the futures, this is Jigsaw, which is a futures trading platform which is based around ladder and heat map and footprint and order flow, everything basically you need in futures, to be honest. So it does kind of everything, including charting. So it's kind of an all-in-one package with everything included in it, and education as well on futures trading and how to trade futures and that sort of stuff. So if you're interested, there's a link in the description to Jigsaw and some discount codes as well. It's not cheap, it's $500 and something. But as you can see in futures, making $500 is pretty easy on one contract. So we're stuck at 30-minute lows here. We haven't had a pop through here, so I'm just watching the absorption down here just to see if we get a further trickle down. This order doesn't seem to be real. I wouldn't be surprised if that is a spoof order. So the market's just being attracted towards it at the minute, but it'll probably get pulled, and as soon as that gets pulled, we'll probably get a pullback. So I'm scratching that. Big 278 contracts just came in long. We are due a bit of a pullback on this as well, so I'll be looking at 39.47 roughly. That's resistance on M5. So I'll try a front run order on that area, and then we should, if we're going to pop this area, we'll run through that section hopefully and then come back down for a run up at the next level, next leg down. And that level there as well is also the value area high from yesterday. So the bull's starting to step in now. So that was a nice long opportunity there as well, but obviously you want to trade in line with your bias, which at the moment obviously is short. Just pushed down on 54,000 contracts so far on the M. Actually, I haven't got that on the M5. I need to have this. Where's that gone? Why did that disappear? Zigzag. So yeah, 13,000 contracts since the open we've pushed down on. So looking for a pullback on less than 13,000 contracts before we get to this low.
I'll try and sell the low again if we do get a pop out. But in theory, like we were discussing earlier, what am I right now? I'm a person that's buying in the middle of the bell curve, aren't I? Because early adoption period really is over. What are we now? 9 o'clock. So the market's been open for an hour. So I'm kind of at the end of early adoption here, i.e. I've identified direction for the day, and I'm going to get the pullback, maybe one or two of them, whereas the innovators were getting in at the start of this move. The early adopters were getting in when they saw the breaks, and they've taken all of this. I am now trying to grab the scraps at the end. 30 minutes I should be done, so I might get one, maybe two trades out of this in Globex before it starts to get a bit too quiet to trade. Same happens in New York, so getting in on that early adoption part of the trading cycle is actually quite critical, which is why in my journalytics I was saying yesterday, I've identified most of my losses come between 10 o'clock and 1 o'clock, bang in the middle of that Globex session, and that's why I was researching opening range strategies, and that's where I came up with all that information. So adding these little bits of knowledge over and over again, just part of what this job is about, which I discovered years ago, was just getting rid of those things that make you losses. If you can, rather than trying to chase a strategy that makes you more money, you're much better off looking at where you lose and eliminating the losses, because you know what makes you money, you know where your good trades are. Get rid of the ones that lose, and all of a sudden you become more profitable, rather than trying to find a strategy that's better than the one you've got. Use the one you've got, because all strategies work. Everything works some of the time, and everything fails some of the time. Identifying why the things fail and trying to eliminate those, either by introducing a new indicator that filters them out, or a condition, i.e. time in my case, is a much better way of doing it, because it's very easy to eliminate something than it is to go and find something new. There's thousands of indicators, thousands of strategies out there. If you're using one way of trading where you're right 50% of the time, concentrate on the 50% of losers and see if there's a trait there. If there's a trait there, remove that trait, and all of a sudden your profit will take care of itself, won't it? Much easier way of improving yourself. I'm going to sell the top of this range. If we get there, because I've got a feeling we may go into a little bit of a rotation on this. Oh, we're not even going to get there, look. Still some decent sized buying orders coming in. So this trade here is an early entry. So this is where I'm looking for price to react value area high from yesterday and support. But I'm getting in. There's two things that I think are going to play out. We're either going to push up into this support area and possibly squeeze through into this cluster because there's light liquidity, or we're going to hit the high and rotate. So this order is the rotation order. If this order fails, I'm willing to take the drawdown to get in on a second bite of the cherry, assuming that that is going to play out, and then I'll add on a break of the low and see if we can get a run. So basically that plan is that next leg down. So high, low, lower high, lower low. Just a market structure move, continuing with the trend. But the advantage of order flow and this type of software is you can see where the volume is. You can see where, if we step over there, we're likely to fly up to. So you can see the levels much clearer in order flow. And obviously you can see when the big boys are entering their orders. So as soon as they get in, if they're on my side, that's why I got out of that trade, yeah? So that was a valid short breakout of the low. But that bubble there is the reason I exited that trade, because there's 230 contracts suddenly came in long. There's no way that thing's carrying down. If someone's just gone long 230 contracts, they're pushing price up. You don't see any of this in one of these. Didn't even get fill. Oh, we've entered the slug period already, haven't we? See, this is what I hate about Globex. You miss it. It either goes or it doesn't in Globex, and it's like pulling teeth. Literally, you got an hour. Hour and a half, and that's it. I'll see if I can get one out of this. If I can get one decent short out of this, I can possibly do $500 if I'm lucky. But I'm not going to try and melt this morning. I'm doing a load of strategy testing this morning. Fun. So you see we're sell heavy down here. There's only one sell order coming in. Market's starting to sell off though. So we might get a pop out the lows here. Won't expect to get too much out of this if we do, but delta's shifted. Double bottom bounce. Dow and the Nasdaq doing the same. Nobody's leading at the minute. Just all doing the same thing. It's going to test the value area from yesterday. It already has. We're in the value area from yesterday. That's the value area high, 34.98. That's value area high, value area low. You mean value area low? Maybe, yeah. That ties in very nicely. That was really thick, that pen. We just got VWAP as well. Sorry, VWAP. Yesterday's point of control, 39.35 to run into, which we'll probably get some reaction at as well. It's 3 a.m. in KC. Got a barbecue pork roast on the crock pot. In the crock pot. Wow. It's 3 a.m. and you're having a barbecue. Have I read that right? Blimey. I'm having a barbecue this weekend. I just bought a barbecue. Going to put it together today as well at some point. I've had a barbecue for years. Don't have the summer for barbecues in the UK. Might get maybe 1 or 2 weekends where you get an opportunity to have a barbecue. And I think I just missed it. We'll see. Enjoy barbecue pork roast. So, the value area basically is just above resistance. Value area, for those of you who don't know, just I'm talking about something and obviously realise that people maybe not know. Again, it's bell curve driven. Short one. This is a scalp rotation, so I'm going to get out somewhere around there. So the value area basically is 68% of the volume from the previous day, of the main areas of volume from the previous day basically. So it just gives you an area of where you get the point of control, which is where the highest volume is traded for the day. Your value area, which you can see here, is purple, and this green is the non-value area. It shifts on a regular basis, but it's always around 68%, and it's that bell curve again that we all use, where you've got outliers, then you've got a bell curve that looks like that. You'd have a high point, median in the middle, which is your point of control. 68% there is where the vast majority of the action happens. So if you look at this bell curve from the volume profile perspective, this is an area of value. So if we are going to continue to do the vast majority, 70% of our trading within this area, which is what we are doing at the moment, if that is going to continue, i.e. the range is going to continue like this, this is the most valuable area, okay, which gives you the smallest risk to highest reward. Yeah, that's why they call it the value area. So on a bell curve, we're assuming that these outliers are going to be 15%. These outliers are going to be roughly 15%. It actually works out one is 15 point something and the other is 16 point something on a typical bell curve. So selling here and buying here is a good idea. If we've broken out of that value area and we're making what's a sort of a double volume profile, if we come back and retest that value area, it's likely that we will pull back down from it because we broke out of it. It's a breakout. This value area will repaint as the day goes on, every half an hour, based on the TPO, which is the volume profile, the underlying part of the volume profile, time and price. Hence me at the moment selling the bottom of the value area, assuming that we are not going to penetrate back into that area. We're going to continue our downward move,
and I'm selling the high of this volume profile, assuming that we're going to rotate. And if this breaks down, this value area will shift to include that volume profile. Again, it's all taught in the courses on Jigsaw, all this sort of stuff. In fact, they don't go into value areas in detail much. I don't like that fail, just because just before breaking the current range low, might need a deeper pullback. Yeah, it depends how strong the trend's going to be today. There's a lot of positive delta coming in at the moment. But this is why I have these 30-minute candles up. They could well come up and retest this high up here, in which case obviously my trade will fail. But if this is going to continue to be a strong trend day, which I think it could be, because if you look at the daily chart, we've got a long way to retrace to even do 50% of that candle from yesterday. We've got a long way down. Got some strength to get there, so you know I'm banking on this area where we're going to push up to now, 46.25s. If we push up and hold 46.25s, we're going to, yeah, there we go. We're going to get a bit of a slip into this area. So I'm just going to resell that. If we push back up into there, then obviously I'll be out up here somewhere. $31.12. I'll take 2 off up there if we get there. Which basically just sitting behind the bottom of the value area, volume profile. This bit of the value area I'm not interested in. It's too light liquidity. This is where we're going to hit a brick wall. This step, which is what I'm front running at the moment. Either works or it doesn't. Still got quite a, we've gone a little bit bullish on the order flow at the moment, but we're not pushing hard. Yeah, there's order flow coming in long. Look, after every flurry, we are getting knocked back. So there's a lot of sellers in. Got a level there as well. 47s, we might get some sellers start to enter. But there's no orders. Look. There's no big orders sitting in the market up here. We need a big boy to come and step on these toes. Okay, so we're back up into yesterday's value area high and resistance on M5. Decent amount of selling just came in there. Not big orders though. Second short. We've got 208 contracts just come in. They're putting them now, but it's a fairly big order sitting behind there. Now, looking to defend that area by the looks of things. So we might get another retest of that area. There's 100 large contracts just come in. Slow, slow. Okay, just popped some more contracts on that side as well. So this order's being refilled up here by the looks of things. Stepped down and filled some contracts. Looks like it's holding well this level. So see if we can get pushed down from here. Little flush. Just going to, actually I'm going to hold that contract. No, there's not much point in doing that. I was just going to take one off down there. I'm just going to see what happens when we get down to this step here. If we roll fast through this into this section, we'll probably be able to get down to the low. So I was just going to take one contract off there just to reduce the risk on it. But to be honest, I'm quite happy with the risk on it. It's only $375. So if we can get a break back down below this area, I think we'll probably get a run lower. So I'm just going to hold it. It's a big order sitting down at the 30-minute low, which will be looking to buy up the lows. What's previous 30-minute low, which is where this big order stepped in before to push us back up. So they seem to be playing tennis at the moment between these levels, which is why we're rotating. Some more sellers just stepped in there, 78 short. building a fair bit of volume out here. So I want to see this slip down below 46.75. If we can get down below that level, we've got a good chance of running the lows now. But we seem to be holding up well here, so it may want to go a bit higher. We'll see. There's no real clues long or short at the minute. We're completely, ever so slightly short, but not. There's no big players stepping in at the minute. Mostly retail, I suspect. Come on, we just need one big order to pop it out those lows. Get everybody interested in shorts. There we go. Okay, so 45.25, we want to step over that 45.25 and want to see some decent action push it down into this level. Okay, we just run into resistance there. $45.25. That's the level I always said I want that breaking. That's held. See if we can get another run up at that. But otherwise, if we can't get back into this cluster and have the chance of dropping through this cluster, I might scratch this. It's not making enough progress quickly enough at the moment. I want this to move down through this a little bit more forcibly. See some sellers coming in and supporting my position, basically. If they're not going to come in and support the position, I want to get out. That's the second attempt at that level, that 46.25. Can't break that step. Third attempt, and we're through. There we go. So, reducing my risk on it. Just going to sit behind this this cluster here in case we rotate back up. That should act as a resistance to push us back down again. $100 risk, $700 reward on those two contracts. just splitting the exit on this, one on that big volume cluster, that big volume node there. That's an anomaly. It's a lot higher than the rest. Lots of volume took place there. So I'm just going to take one off there in case we get some buyers, and the second one off at the cluster low, and then I'll enter again if we manage to break the lows. If the way this is going, that's likely to take half an hour. Just going to protect the position. So it's no loss trade now. See, we tapped the highs there, that and there. So these two price points are kind of what we call a step. So they're good 50% higher than the previous price level. So there's way more transactions holding this level, which will hopefully keep that rotation now in that area. If we slip out of this again though, we can do exactly what we just did. So we could start a rotation in this area here, and this is basically what chop is. If we are non-directional now and there's no buyers or sellers in control, we chop and we build a new volume cluster. So you're just looking for these to hold, looking for where the volume is, and these steps act as support and resistance, as you saw perfectly to the pip there, exactly where I entered, and that's why my stop was here. If that gets broken, that is the potential. So you don't want to be sitting in it up there. If it breaks that, I'm wrong, I'm out. And see here, now we just push back down into the cluster, and now we've pushed back up, hit the top of the cluster, and hopefully now we'll just rotate. Jesse closed at 175 on that push down. Initially wanted to let it run, but fearing a pullback. $175 is $175. It's got a large sell order to come in there. There you go, 1 TP out. $137 in the bank. I've got locked in. I'm just going to lock that in actually at the top of the cluster. So just locking another 200 in. So worst case scenario here is 337. Best case is 6 something. Big buy order just come in there. I'm going to flatten that. I'll take 337. So I took 475 on that. That scared me out. And look exactly where it happened. That's exactly why I took my profit on that node, because that node is an anomaly where there was potentially buyers going to step in and rotate back up. It will quite probably break, and which is fine. But if it rotated back up, what I don't want to do is take that out. So you know, this is the real advantage of order flow. You can see when these guys are entering the market. You can't see that on a candlestick.
but you can see it in here. You take that profit. So if this rotates back up there now and stops somebody out at break even, they shouldn't have done it because they knew it was coming. Yeah, just these clues you do not get on any other platform. Massive advantage. Which is why you don't see any professional and prop traders using a chart, because the chart doesn't tell you what's going on. So yeah, there you go. I'm up 535, and I think I'm going to call it a day because it's crap. It's very slow. So right, let's just have a quick look and see if there's anything exciting happening on FX. So there you go. Let's see. That's this is where we are now. Yeah, what we were just looking at. That's the previous day's, not yesterday, but the previous day's high. And typically on a large bullish candle like that, you quite often retrace at least 50% into the candle. If you are going to go bullish, quite often you'll get a good push into that candle. We're nowhere near any of that yet. So there's a lot more downside on this. We may well just sit around and do it in New York though. Don't forget, New York is the stock exchange. There's earnings releases coming out at the moment, so the market isn't going to be dumping those orders in for its clients until the New York Open, and that first minute is going to give us a real good advantage, indication of which way we're going to be going. So, Trevor, I find the charts can make you hold on to your bias. Yeah. Yeah. I mean, you don't even have to look at, I mean, charts, I use charts to give me a good idea of volume, and which way the volume's going. But it's very hard to unprogram price action. When you've been watching price action for 13 years, it's very hard, or however long you've been trading, it's very hard to unprogram all of that from your memory when you go into futures. But you don't need it. If you just had a ladder and you just watched that volume profile, and you saw how I used volume profile there, that was a really, really good example. That they don't work that way all the time, obviously. It's, you know, but that's the theory. You can see where the volume is being traded, and you can see where the thin volume areas are, and that's what we call balance and imbalances in the market. When something goes into a balance, it tends to stay in a balance until someone goes, actually, I don't want to transact here anymore. I'm going to try and push prices higher. And then you go through a period of price discovery, which is imbalance, where it tries to find the next area where would make balance. And the previous area of balance, i.e. the bottom of the volume cluster that you had previously, is usually where everyone goes, well, no, I wanted to sell out the bottom here. That's why I push price down. Therefore, it hits the bottom of the cluster and comes back down again. And you can only see that in a volume profile in order flow. You can't see that in a candle. A candle will show you, like, you know, if you look at those 5-minute candles we just looked at, you couldn't see that where we were here. You couldn't see that the top of that candle, the top of that wick, you couldn't see that that is where the thicker part of the volume profile started, and we just pushed through the thin part of the volume profile from a thick part of the volume profile. That candlestick is literally just a hammer. That shows you why hammers and shooting star rather. That shows you why hammers and shooting stars work, doesn't it? Because that is where the volume is thinnest, and it shows you when we got up to that area that, yeah, the sellers took control and pushed price back down again. That's why pin bars and hammers and shooting stars are so good. But you can equally, you can see that happening, yeah. And if you see one of those appear on your chart and there is not a volume profile above, or a reason why that happened, that's where everybody gets caught out. Yeah, because
there's not necessarily a reason for that to have happened on a candlestick, which is why you only take you only trade shooting stars and hammers at the very top of a move or the bottom of a move. If you see a hammer or a shooting star appearing inside a range like this, yeah, you discount them. Because what this is actually doing here, if you look at this entire area, that is creating a volume profile like that. Yeah, we want to be buying the value area low and selling the value area high of the volume profile, not taking a long because we've seen a shooting star or a hammer or a short. Yeah, just under the hood makes a massive difference. Trevor, I'm using the charts to have an idea of what the others are doing, to see how they will catch you out. Yeah, exactly. It's like having it's just like looking under the hood of a supercar. It's brilliant. It's just, you can't see that in a candlestick. It makes a big difference, doesn't it? Last verse was very clear. Right, so let's have a look at where I am. Drum roll. Nowhere much forward. Aussie CAD. Oops, still coming down. So that's pushed up and rejected. Pound US dollar hasn't gone anywhere off of CPI. So CPI basically, we've had a push down, we're pushing back up again. CPI's not really done anything. New Zealand dollar Swiss looks like it's pushed and stalled. No, it hasn't even pushed, it's just flat. So New Zealand dollar Swiss flat, London. Oil seems to be making a bit of headway back up. Just about to get a reverse alert long on that one. So there's a long opportunity. Oil just pushed down into support. And again, looking, these areas here. Why has that gone super thin on me? These propulsion gaps, yeah. You can now see why I use this indicator on my charts, can't you? Yeah. Accumulation. D in a volume profile. Push up. Thin area of liquidity. Range. Volume profile. Thick area of volume profile. Thin area of volume profile. Thick area of volume profile. That is a liquidity, a price discovery phase. Yeah. So we've got a nice big volume profile, and we've got an area of price discovery to find out where we next want to go to balance. So the next time this comes down into the high of this volume profile, we will likely see a rejection. Propulsion gap. The move out of the area of range gives us a propulsion gap. We come back, we retest the propulsion gap and bounce. That is exactly the trade I just took happening in oil right now. And that's what these show you. Yeah. Breakout, retest. So again here, we built a large area of volume. Yeah. We broke out of it, ran up out the high. So this is a breakout trade. Pull back into area of high volume. Push up into another. Yeah. So look, volume profile. Push. Volume profile. Yeah. Volume clusters. Balance, imbalance. Balance, imbalance, balance, imbalance. That's what it does all day long. But you can't see that here. You can. To a very trained eye, you can see exactly what's going on. Yeah, and this is like, sometimes these hold, sometimes they don't. We know that, don't we? Now we know why. Yeah, same thing on the chart. It's just this is harder to read. Well, I say harder to read. It's harder to read for some people. It's easier to read for other people. Depends on Every individual's different, but exactly the same stuff under the hood, isn't it? So oil pushing up. I'm going to bank an oil today, hopefully. I've got TP on oil up there. So range highs, again, there's a reason for that, because there's a likelihood in that part of the volume profile we may get a rejection. So I'm getting out. So yeah, oil potentially today. I've got potentially profit takes on loads of stuff, just waiting for some movement basically. This 2.6% could easily be down at 0.5 by the end of the day. We just need some movement on something. Nothing's moving at the moment. US dollar CAD, we've had a bit of a push and a little bit of a rejection. So we've got the 15-minute reverse alert, very nice tight one on the 15-minute. We're just coming back down at the moment. That looks like that's Canadian dollar strength. That's coming in ahead of the CPI figures. Looks like CAD strength. Yeah, this is CAD strength at the moment pushing this down, not US dollar weakness, which is good because my Aussie dollar CAD. And this is the advantage of being hedged. Yeah, if you're hedged and that currency moves, one of them's going to win, isn't it? So I'm playing the hedge at the moment on the Aussie dollar CAD. If I can get this back down to anywhere down here today, I'm going to close the whole lot out, I think. I'll see how I feel later. I'll put it in the Telegram group what I'm doing with it if I'm closing any profit out. But this US dollar CAD at the moment, I'm nearing 2% DD on it. So if we push down, as I said this morning, into this area here, this is where I want to see the US dollar step up. If it doesn't step up down there, then I'm going to have to start doing a little bit of DD control on this. Which first part of DD control on this will be probably to take an aggressive position here. But I'm going to see what happens today with the CPI figures and then make a decision based on that. News-wise, for the US dollar, we're really not got a lot of US dollar news. Unemployment and Philly Fed doesn't really do a lot. The first proper news we've got is PMIs, service PMIs. And the service industry in the US is not as big, so it's the weaker of the PMIs. So I don't know. I can't see anything really, any catalysts to boost the US dollar this week until Friday, unless they power up the yen. If they power up the yen, the US dollar usually gets dragged along with the yen because money will flow into the yen and the US dollar quite often at the same time. So if we do get some bias long on the yen tomorrow, we'll probably see some strength coming into the US. So there's at the moment it's just a little bit difficult to read. I've got 5 positions on it, so I will start to do something about it if we don't get a push today. But as I say, I'm still within an ADR, so literally I just need a day. I need one good day and I'm fine. So just hanging on in there for the US at the minute. They've just been a bit lackluster. But hey, pound US dollar is pushing down. Hopefully we get this drop today on the pound. Doesn't seem to be impacted at all by those CPI figures. Not interested. As I said, again, a lot of these CPI figures and interest rate figures are factored in. The market has factored in these conditions already. So the price action you see on the approach to the news in the days running up to it is the market just doing its normal thing, assuming that we are going to get what we're going to get. They were forecasting an increase. We got an increase. The increase was a bit bigger than normal. So it's as expected, which should be bearish pound. And hence obviously we got the drop, but not dramatic because it wasn't really that much of a shock, was it? So okay, so that's all for today. Just keep your eyes on ADRs today. It's really crappy session so far. Not an awful lot of movement. But indices are going the right way, which is going to be good for US. They're just not going the right way very fast at the moment. Everything's a little bit slow. So hopefully we get that picking up in New York. But everybody's waiting for the news tomorrow, so I wouldn't be surprised if we do have a flat day today. no speculators are going to get in with big positions ahead of euro and yen use. So I suspect we've had the movement for this week so far, and we'll just basically get some sideways. But we'll see. I'll let you know if I take any profits in the Telegram group. Back tomorrow morning, same time, 7:50. Normally late on a Thursday. Oh, it's Wednesday tomorrow, isn't it? Sorry. No, Thursday tomorrow. Yeah, sorry. Yeah, I'm normally late on a Thursday because I have a spin class early morning Thursdays, and I don't get back until 7:30. So 10 to 8-ish tomorrow morning, as usual. But have a good day, good luck, and if you need anything, come in the Telegram group, and we'll see you then.